Have you ever wondered when you transition to that next great chapter in your life, retirement, where your income's going to come from? Then this video might be for you. Hi, I'm Micah Shalansky, and this is the FERS Federal Fact Check. Today we have a question from Selena, and she says, I'm 65, born in November. I've been a federal civilian employee for 5 years this November. I've also withdrawn some money this last year for emergency reasons. Now, if I decide to retire this year or in the next 6 months, how much and from where will my retirement income come from? 1, Social Security. 2, both Social Security and FERS. 3, both Social Security, FERS, and TSP. How will I know? How do I calculate how much monthly income I will have, and when is the best time to retire? Selena, that's a wonderful question. There's a lot of things going on there. Now, we have some information, so we can give you some ideas, but we don't have enough information in order to paint your picture. So let me share with you how I would walk it through. If you were a client sitting in my office, how would I go through this? Well, the number one thing I would want to know whenever we start to do planning is how much a month are you spending right now? Now, I jokingly say this is a trick question, right? It can be a little challenging of a question to think about, but let me tell you, if we're ever sitting down and I ask you this question, let me tell you what the answer is. 100% of what you're spending now. How much do you want to spend in retirement is 100% of your net paycheck right now, right? So that's the first question. How much do you want to spend in retirement? What you're spending now, not 80%, not 60, it's 100%. Why do I say that? What happens when every day's a weekend? Do you think you're going to spend less, or do you think you're going to spend more? Nope, the commute doesn't count, right? We've all gone through COVID working remote, so that doesn't count. We can order everything online. We can do all those things, right? So we're going to want more money as it comes into retirement income. So that's the first thing we're going to do. Once we find out what that is, now we need to break it down and we need to look and say, great, where's that income going to come from? Well, 1, what's your pension? How much is your pension income going to be in retirement? Well, Selena, we don't have enough to answer your pension income, but here's the formula. We would take your years of service times a percent, generally 1%, times your high 3, your highest 36 consecutive months of pay. That's your gross pension. Then we got to net it out, right? We got to say, what are the deductions that are going to come out of that? Survivor benefit, taxes, health insurance, etc. Then we're going to look and we're going to say, great, what's Social Security? How much is that going to be? When should I turn it on? We have a window of 8 years between 62 and 70 to turn it on. There's a penalty if we turn it on early. There's a benefit if we defer it and we turn it on later. What's the best option for you? Know what those are going to be. Then we're going to look at your TSP and your investments, all investments as a whole, and say, great, how do we turn that income on and where does it come from? Now, depending on your situation, there's a whole lot of talk about how much can you successfully take out of the TSP, out of your retirement accounts. For us, when we're working with our clients, we take out on average around 5% distribution. So if you had $1 million, that's $50,000 a year you're taking out of your TSP account. If you had $500,000, that's $25,000 a year you're taking out of your TSP account. But in order to achieve this, we call this a dynamic distribution rate, there's a lot of things you have to put in place. We have a course called the 3 Critical Concepts for Retirement. If you're not familiar with a bucket approach or a bucket strategy for cash, income, and growth and how to separate things in retirement, really go take a look at that. We spend a lot of time going through that in detail on how to outline this. So we would sit down and we go through each one of these steps and say, great, how close are we going to get when we sum all of this? How close are we going to get to that dollar amount? Good news is if we get there, perfect, we're on the right track. If we don't get there, all right, what do we need to do differently? Do we need to defer TSP so it grows a little bit more? Do we need to work a little bit longer? Do we need to spend a little bit less, right? What's that combination that's going to be there? So in your situation, when you're watching this video, go through and ask yourself these questions. How much do I want to spend in retirement? Hint, it's the same thing you're spending now. How much is your FERS pension going to be? What's the net? What's the net Social Security after taxes, after Medicare expenses, etc.? What's your TSP and investments? What is that net income going to be to you? This is the process that we would work through. Then we put into what we call a retirement income timeline. When and where is that income going to come from throughout retirement in order so you know where your retirement paycheck is. So hopefully this information has been beneficial to you. If you have a question that you want answered on the FERS Federal Fact Check, scroll below. Submit that question to us so we can review it. Or if you want to know how to do this in your personal situation and you want that one-on-one help, click that schedule appointment button. Let's schedule a time that we can sit down face-to-face or video to video and we can start going through your situation to improve your retirement. And until next time, happy planning.